afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. Indian markets fall mirroring global peers, with financial stocks like Yes Bank leading the laggards list. Reliance Industries bucks the trend, gaining more than 11% after the group lays out aggressive plans. Auto sales have fallen the most in 19 years. ASM seeks urgent measures from the government. And Sun Pharma, Coal India and ONGC are the three nifty earnings coming out today. Good afternoon, Neeraj. At day's low, clearly the support which came in from Reliance has been negated by HDFC Twins.
Completely, and you can see a pattern out here, Navneet. I think the FI-dominated stocks are seeing the brunt of selling pressure on the financial side, because it's not just the HDFC Twins. Bajaj Finance as well is down about 3% in trade. Some consumption names have come under pressure. Again, FI-dominated stocks. It'll be very interesting to see if Friday's buy number gets quickly negated in the session. I suspect it could, and in part reason, at least my belief, is that what's happening at the PBOC level and the dollar yuan rate is probably one principal culprit, in addition to what's happening in Hong Kong as well. So the Nifty 50 at the lowest point of the day, the Bank Nifty down about 2% at the lowest point of the day as well. No need to tell you that the market breadth is looking adverse. And pull up the contributors list once for a moment. It'll show you that had it not been for Reliance, the 100 points that's coming in from Reliance Industries, it would actually be down about 300 points, not on the Sensex, on the Nifty, mind you. That's a telling blow that we would have had. 212 points out, negated in part by Reliance's 108 points. But HDFC Twins, ITC, L&T, heavyweights clearly under pressure. That's the contributors list. And if you just bring up the heat map, you will see that that the number of quantum of red is enveloping the quantum of green by a margin. Indiabulls Housing Finance, because of, again, news flow and the momentum that the stock has had, is doing okay, and Reliance is doing okay. I mean, GAIL and Sun Pharma really from a weightage perspective don't matter. But look at the losers. Autos, financials, Yes Bank, Mahindra & Mahindra, HDFC, Maruti, Eicher, Bajaj Finance. The list is peppered with those rate sensitives, and in between, making their presence felt, are Bharti, which has fallen 5% today, post the GOAGM yesterday. Some weakness at NTPC after the numbers on Saturday. Not as bad, but the stock is down about 5%, and Grasim continues to fall as well. Vodafone Idea succumbs to pressure. Grasim invariably tends to go down. So a lot of pressure out there in some of these top financial names. I guess the trend might not be too different at the broader end of the spectrum to Devina.
Well, before I get to that, Neeraj, it'll be interesting to see that the pain that we are witnessing here also comes on the back of what's been happening to global currencies, and the yuan, which now trades is about 7.1 to the dollar, 7.10. So that is having its own negative bearing on emerging market currencies, where the rupee itself, when it opened this morning, opened much weaker, and now trades at somewhere closer to 71.24. This is the rupee dollar, 71.23, but the yuan dollar equation seems to be worsening, and that's having its impact on global currencies, emerging market currencies and emerging market equities as well. But to take you through what's been happening in the broader market space, lining up the first few big movers, everything under the Reliance fold has been doing well. So even if you were to take a look at some of these distributors, Den Networks, Hathway Cables, all up in trade today. Godfrey Phillips on the back of numbers, a phenomenal start, and it's been on upper circuit since early afternoon. So that stock's doing well on the back of profits rising more than 2 times. Stocks on the move, RNAM is doing okay for itself. Jaycorp, Lakshmi Vilas Bank finally takes a breather after almost 10 straight days of losses for the counter. It's up about 5% in today's session. However, not all is well, so you still have a market breadth which is tilted towards the negative side, and stocks which are losing out in trade this afternoon include the likes of a BHEL, disappointing set of numbers, and the stock's down about 10%. So is the case with Motherson Sumi as well. Muthoot Finance on the back of what's been happening with regards to business in the flood-affected regions of Kerala, and that stock is down about 7%. Volume buzzes, Just Dial. I think everything which has a bigger FII bent is also taking a knock. So Just Dial down about 7%. Graphite on the back of numbers is down about 7%. DV's Lab 2 is looking extremely weak this afternoon. It trades about 22 lakh shares, much higher than the last 20 days average. average. But what else is moving? We've got the futures and options space to monitor. Navneet joins in with the updates on that. Navneet.
Thanks for that, Davina. Well, the markets went up last week on Thursday, Friday, and that was on account of short covering. And we did manage to recover the losses midway today, but every rise is being used to sell. And that's what we've seen. Nifty is now currently at day's low, inching very closer to the mark of 11,000. No major OI build-up seen when it comes to the open interest currently, just about 3% higher when it comes to the Nifty futures. Pull up Bank Nifty, which saw major unwinding on Friday, where open interest was down nearly 12% and nearly 20% increase seen, which is telling you financials, by the way, has been really weak in today's session. So at every level, there are fresh short positions being traded. You remember on Friday, Nifty Bank managed to close above the 200-day moving average, but right now, 28,000, which was a support for this index, at least for tomorrow's expiry, has also been breached. Thursday being a holiday, you'll have the weekly options expiry taking place tomorrow. In terms of what levels to monitor now, if you look at the maximum open interest on the call side for Nifty, it is at the 11,200 call. And on the put side, it is at 11,000 strike, and we're inching very closer to that mark. Put writers ran for cover, especially for 11,100 strike, but major call writing has come in at the 11,100 call, which has seen addition of nearly 22 lakh shares. Even 11,200 strike today is seeing addition of about 12 to 13 lakh shares. So if you go by the premium, the near-term range that you're getting now, the support will come in at about 10,950 on the index. In terms of stock futures, Reliance Industries, the big boy, has been in focus, 11% higher in trade. Futures just about 5 to 6% increase, so no major addition seen there. But I think the actual buying is coming on the cash side, and that's going to be visible. If you could just pull up the AVAT function of Bloomberg, it's gone up in really high volumes today, vis-a-vis the average volume that one has seen in the last 20 days. As you can see, the white line is projecting today's volume. On the cash side, open interest is just up about 7 to 8%. And on the option side, which has become really active in today's session, 1300 call is sitting with maximum open interest, which is telling you that's the near-term resistance for this stock, which is now at 1290. We managed to cross that mark, but it's come off from that levels, and that particular strike has seen open interest surging about 70% today, and the premium on that one has risen by nearly 6 times. So let's see where the closing comes about for Reliance Industries. Motherson Sumi reacting negatively to the numbers. It's been an underperformer, down 41%. Of course, it's been trading below all its key moving averages. Short positions today post the numbers have been seen as the open interest is up about 14%. And lastly, Muthoot Finance being highlighted in our check. The stock's trading below its 50 and 100-day moving average. It's fallen on good amount of volumes. Remember now, this is a stock which has outperformed on year-to-date basis. We have seen the gold finance companies doing pretty well, but post the numbers, this too has come under pressure. And of course, the news of flood also impacting this counter.
All right, let's get in a market voice then. Abhiram Eleswarapu is joining in right now from BNP Paribas. Thanks very much for joining in, Abhiram. What are you making out of whatever's been happening domestically and globally? Today you're seeing the yuan touch 7.1. It's having its own negative impact in global market equities, and the sentiment itself seems to be getting weaker by the day.
Good afternoon. Thank you for having me here. I can break this down into two parts. One is the domestic side, and the other the global side. Domestically, I mean, the various indicators that we're tracking, about 25 of them high-frequency indicators, are generally suggesting a continued slowdown, a further slowdown into 2H, and that seems to match what corporate commentary is during this earnings season. In addition to that, earnings season has been on, and I would say we've had more misses than beats in these results. On the global side, a lot of it is, of course, and this weakness is not restricted to India alone. Global weakness is led by global trade weakening and manufacturing weakness across the board. And these data points on a daily basis, unfortunately, seem to be heading more south rather than north.
So what would the strategy be? Will it be to accumulate, slowly start deploying into the equity markets? Obviously, you just cannot time the markets, and right now, to probably even look at entering into the mid caps and small caps would be like catching a falling knife. But how would you approach the markets now?
Yeah, thank you. The good part about today's market is that the valuations are much cheaper than they were. So the Nifty is trading close to its long-term averages. The mid and small cap indices are well below their long-term averages, so that's a good part. The negative of this, though, is that I do not think those valuations have factored in potential earnings cuts that could come out in the second half of the year. So the strategy from here on could be threefold. First is that you continue to have high quality companies, which what we call structural winners, and you can find them across financials, especially on the private bank side, insurance companies, which actually have been have had good results this season. Then in select tech and in select consumer, I would say these are the areas where you would find these kind of companies from a long-term structural standpoint. The second option is to look at companies that have had very limited earnings cuts. And I think in pockets of industrials, you have that. And last but not least, speaking about mid and small cap companies, you have to be really selective here because mostly mid cap estimates are built around the story. And the story is not necessarily what's the picture on the ground. So there, I suppose you'll have to be extremely careful. If there's one area they could highlight today where valuations have fallen quite a bit and the space looks attractive, it's downstream energy companies.
Okay. You said valuations have come off, so at 17 times is Nifty looking attractive to you?
It's average valuation compared to its historical levels. So what they would say is it's at the crossroads, like they say. It's neither positive nor negative. It's the point is, at this is the more time to be extremely stock selective and to follow what we call a textbook-based, textbook type of investing.
Okay, so what soured the sentiment? We've seen, stocks where FI holding has been higher and rightly put. So you said good quality stocks, be it HDFC Twins, which are clearly negating the contribution that we've seen from Reliance Industries. They've come under pressure, and it's just not about today, agnostic of today. Since the news of FPI surcharge has come in, and there were some hopes, maybe it gets rolled back, but nothing concrete has come from the FM so far. Do you see this phenomena continuing? If one were to take refuge into quality stocks, would you do now? Because they are owned by FIs and they are now dumping the stocks. Not dumping, sorry to use that word, but some bit of selling pressure has been seen there.
Yeah, I mean, you're right. If I look back over the past month and a half or so, I'd say three things. One, of course, like you mentioned, the tax on FPI trusts being one of them. The second thing is removal of or bringing in buyback tax. And the third bit, is the fact that the promoter holding bit to be increased from 25 to 35%. So what that would mean is lead to a equity pipeline of, let's say, about $95 billion or so. It may not happen in 1 year. It may happen over a period of time, but still that's a significant supply. Now, am I going to worry about whether the stock is FPI owned or DI owned? No, that's not the way we usually look to invest. Ultimately, you have to look at the fundamentals of a company.
So do you use this as an opportunity then?
Absolutely. You should always look at company, and if you slice and dice the Indian BSE 500 or the Nifty 50, ultimately you could come up with a universe of 15 stocks. These are companies that have had double-digit earnings growth over a long period of time with good ROEs, good free cash flows, and so on. And when they fall, you have to buy those companies, and that is I would say, one of the the best possible option at this current moment.
What do you do with autos? The recent data suggests the sales have fallen more than in 19 years that we've seen.
Correct. On autos, it's two ways. If I take a long-term picture, a 5-year view, then the threat of EVs is quite real. And between now and 2025 or 2023, there are significant changes coming up around, for example, rise in insurance cost, a rise in safety costs, and so on and so forth, BS6 next year. So autos, you'll have to look at it from that standpoint. From an immediate near-term perspective, I'd say spending intentions on discretionary items or high-ticket items are not very good at the moment across the Indian situation. But in that scenario, maybe two-wheelers are a better place from a near-term standpoint, simply because if at all there is a recovery in spending, it will more likely come from that side.
All right, we'll leave it at that, Abhiram. Thanks so very much for joining us this afternoon with your thoughts.
Thank you very much.
Appreciate it. And that's, a quick take on the auto space. No doubtedly, it's been a good monsoon. You have filled that gap up. So let's see whether or not anything meaningful happens or changes in terms of some of these two-wheelers at least. But keeping it with the earnings then, Info Edge posted a 15% rise in revenues on a year-on-year basis, but it posted a net loss of 191 crores on the back of loss-making joint ventures. We've got Chintan Thakkar. He's the CFO of the company. He's joining us right now to take us through the quarter gone by. Mr. Thakkar, thanks very much for taking out the time. So break it down down for us? You know, we've been talking about the pain that's been coming to the bottom line with regards to some of the joint ventures. You know, what happened this quarter, and do you expect anything to change in the upcoming quarters with regards to these joint ventures?
Yeah, as regards to the investments that we have made, the so-called joint ventures, right? These are all early startup investments, right? So you have, there are few are there which are very small right now. Some of the companies which are like, Zomato, Paribas, which are in high growth phase, so obviously these companies will continue to have some kind of, losses. And you need to look at our standalone business separate, independent to all these, some of these so-called investments that are now getting consolidated in our books of accounts. If you see from the standpoint of the standalone companies, our top line is kind of grown by about 20%. We have maintained our margin, and our bottom line has also grown by around 20%. So I think so far as all our internal verticals are concerned, our key businesses are concerned, I think we are probably bucking the trend. And this investments in Zomato and Paribas would continue to be in kind of some kind of losses for a few quarters to come.
Let's talk about Naukri and 99 acres. They are at the cusp of a new growth cycle. Is it an anticipation or an expectation that you will see high-teen growth rates coming back for both of these, Naukri in particular?
Yeah, if you look at our past few quarters, I think we have been growing in high teens, and if given where the economy is today, and if it continues to be this, we would think that it's a very solid growth in the past, and so we can probably rationally extrapolate that and say that, look, maybe this is something which can happen. The key reasons for growth in recruitment business is that IT is still having a gross hiring, and I think that is having a good impact on our top line, Plus, whatever innovation that we have done, whatever the new offerings that we are doing, and I think our superior executions, all that is contributing to a higher rate of growth. And if as I said, that if economy probably continues to do even better from where it is, then we should be actually much growing even faster. But assuming that economy remains where it is, or in this kind of range, then we are hoping that we continue to give this kind of results.
Kind of an improvement in the digital spend penetration are you expecting for 99 acres, sir? And how much do you expect the billing growth to be for 99 acres? From the current 20, you're seeing about 29%. Is that something that will be?
So if you...
Yeah, go ahead.
Yeah, so 99 acres, the billing growth for this Q1 is about 19%. Even if you look at the quarter before that, it was around the, it was 20 plus kind of growth number. So what we are really seeing in real estate is that, yes, there is definitely a pain when it comes to builders and developers spending on the marketing side. NBFC is also kind of impacting the builders and developers side. However, the consumers who wants to take a decision as regards to buy and sell, I think those decisions are still being done. And there's a liquidity available to them as well. So we have seen the brokerage side of business, which is in resale and rental side of our business, is actually growing much faster, and that's contributing to our growth, right? So if economy, and the business confidence and the consumer confidence remain at this level, then hopefully, that part of business, should continue to do well. Of course, there is a pain on the real estate developers and on the builder side, and that's probably likely to continue.
Sure. So coming to the marketing spend and, that you've already been incurring at an increased pace, when is the anticipated break even for 99 acres according to you on the back of an improvement in the margin trajectory?
Yeah, if you look at even this quarter, or even if you look at the last year numbers, I think this quarter, if you see our revenue and our cost line, we are breaking even. In fact, there's a small profit of 24 lakhs or so. Of course, there is a little positive impact of of the new accounting standard on the lease charges as well. But even if I had to take that out, maybe there is a little bit of of an EBITDA and a loss. Even if I look at last the whole year numbers, I think on a cash basis the EBITDA loss was something like 5 crore. So we are almost on the kind of break-even kind of stage when it comes to 99 acres. I think it's a question of how the top line would grow. And just to kind of clarify, when we are saying this break even, it is despite the fact that we are investing in marketing and on the product and on the technology side. So there is an inherent growth, and there is an investment happening for the future or the emerging future, rather than just looking at the current revenue numbers. So I don't think that we are kind of too much concerned on the margin structure of these businesses.
Just one question from my side, Mr. Chintan. You've posted a loss for the quarter at 253, which is owing to the losses incurred on some joint ventures. Is this a one-off, or there is more to account in the coming quarters?
No, these joint ventures are the investments that we have made in some of the startup companies, and then the two large ones are Zomato and Policybazaar, right? And plus we have another 18-20 small startup investments that we have done. So the nature of the startup business is that it will continue to have losses till it reaches certain size and scale. So I think that will continue. So that was always been there, and that will continue. If you look at standalone, our internal businesses, on our internal verticals, we have this quarter EBITDA of a little above 100 crore. So when it comes to our internal businesses like Naukri, 99 acres, I think we continue to do well on the top line as well as on the margin side. Some of the investments that we have done, I think we'll continue to see a high growth on top line, but we'll also continue to see some kind of losses over there.
Okay, Chintan, we'll leave it at that note. Appreciate you joining us today and taking us through your quarterly performance. That's the management of InfoEdge. Clearly, I think Naukri once again aiding the performance system around 20% higher with regard to top line there, and billing growth of nearly 19%. InfoEdge, the stock's not done too much, actually just down about 1% in trade. Let's move on and stay on with the Embassy REIT. Actually, let's talk about that one, which is the first such structure to get listed in India. The trust now manages only commercial properties and came out with their earnings for the first time since its listing. Sharad Dubey caught up with Mike Holland, CEO of Embassy REIT, and started off by asking him on the distribution yield. Here's what he had to say. Listen in.
The board approved earlier this week a distribution of 417 crores. That equates to 5.4 rupees per unit. In our offer document back in March, at the offer price, that equated to an 8.25% yield. Clearly, with our unit price rising over the last quarter by 22%, that we're on track in terms of the total quantum of distribution for the year, which we said was 1910 crores. But clearly that yield has come in with that 22% rise in the unit value. A couple of things going back to the regulatory thing, that we're going one further than the Sbi requirements. Sbi say that we must, as a REIT, give distributions once every 6 months minimum. So we've gone further. We're doing a quarterly distribution. And the second piece is Sbi REIT regulations require that we distribute at least 90% of available cash flows. We've gone significantly further than that. This quarter we're distributing 99.7% of NDCF. So the unit holder, the investor, can feel confident that they will receive that quarterly distribution on a regular basis, because it's backed by 75 buildings, 11 assets across the country, and managed by
Mike, I would just like to ask one more thing.
Yep.
Is the operational aspect, going into this June quarter, what were the operational numbers looking like this time?
So, the appeal of the business is that it's a highly predictable cash flow from the contracts that we have with those 160 plus tenants. All of our numbers were in the offer document. We're tracking to that. We're on track, and we don't manage the business quarter by quarter, but we do look at the whole year, and we're in great shape. I think there's clearly a lot of noise in the market around two big issues, liquidity and the NBFC situation, and the residential sector is going through difficult times, as it has for a little time now. Neither of those issues impacts us. We have no residential whatsoever in the portfolio, and there's no. In fact, the regs don't allow us to do development, so it's not part of our business plan. In terms of our debt levels, we have an 11% net debt to TEV position, which means we're nicely placed in the event that there are any acquisition opportunities, which we can take through either through debt or issuing fresh units. So we've got maximum flexibility for that growth through acquisitions, and a lot of the market noise and the negative sentiment that's out there. On the converse, we're seeing our occupiers are telling us that they want to grow. So last quarter we leased 595,000 square feet to 15 tenants. We're building 3 new office towers totaling 1.4 million square feet. They're currently tracking 2 quarters ahead of schedule. From an investor perspective, by bringing those buildings forward, the timing of that income from the rent, when we rent them out, comes forward, and that adds to the numbers. So our business is, and has been for some time, is in a comfortable, confident position to deliver to our annual distribution that we charted out, the 1,900 odd crores.
Mike, I would like to ask about the tenants, any anchor tenants which have come up in this quarter, and what pipeline is looking like for you going into FY20.
Yeah. So we're in a super place on that in terms of our industry. Our top tenants include not just technology tenants, companies like Google and Microsoft. We added Facebook with a new lease this last quarter. So not just pure play technology, but also companies who are in the cybersecurity space, companies who are in the banking and finance sector, so blue chips like a JP Morgan or a Wells Fargo or a DBS Bank are tenants with us. Companies like Rolls-Royce, Mercedes-Benz, and so on and so forth. It's a very broad, diverse tenant range. In the last quarter, we're happy to report that we signed a couple of deals with HCL, with Infosys, BPM, and I mentioned Facebook. So that 595,000 square feet is domestic and international tenants, but high quality. We've seen, and I think you can see it in their reporting, but a number of the Indian top-tier IT companies have been talking about going to the asset-light model. So historically, they've built their own campuses. HCL and Infosys would be an example where they're looking at that leasing side. And the hiring stats and reports that have come out are very positive around the additional new headcount, which then feeds through to demand for our type of product.
Yeah, Mike, one more thing is your Embassy Manyata project,
Yep.
that is actually contributing a good chunk of,
Yep.
contribution to the revenues or the lease, which we say.
Yeah.
So what is the progress and the update of it? And if you can give it, for the viewers, for till FY22 or FY23, how does the progress has, been for this project?
Yeah. So Embassy Manyata is a super asset on the north side of Bangalore. It's a 120-acre business park. There are over 100,000 people working on that park. It runs as close to 100% occupancy consistently as can be. There'll always be maybe in that 10, 11 million square feet, there might be 20,000 square feet available at any one time. I mean, it's 99 plus occupancy. We're on track with a new development at the front of that park where we're adding 2 office towers, each of which is 400,000 square feet, a conferencing facility of 58,000 feet, and 2 new hotels to cater to the users of those parks. The office towers, we're looking to deliver those 2 quarters earlier than projections, so by March of next year. We've already got a great pipeline of tenants, not just at Manyata, but across the portfolio that we're speaking to, over 500,000 square feet of potential tenants. The hotel developments are on track. The reason that we do those hotels in those large parks is it improves the business efficiency for the tenants. We often talk about what we call a total business ecosystem, so that as a tenant, they've got on their doorstep a conferencing centre that they can use. They've got hotels, different price points, as well as all the other things, sports.
Yes, that was a good point, Mike. One more thing, lastly, I'd like to ask you is that Indiabulls Real Estate is actually, they're actually selling their commercial assets and also the residential assets, so that they have the merger with Lakshmi Vilas Bank, so that they actually become a bank. So have you got any interest on this, or is there any progress on talks regarding this?
Yeah. So clearly there's been a lot of media coverage about potential sales and discussions about those Indiabulls properties. On acquisitions, first off, I would say we are out in the market looking at acquisitions. The press coverage around Indiabulls has related to conversations that are going on or may be going on between an embassy and a Blackstone. It's not at the stage that it's been a conversation that's been with us at the REIT. You mentioned about residential. We will not have residential in the REIT portfolio. If those assets come up for consideration, we will look at those in the same way as we would look at any independent asset, but that's not the case at present.
Well, Mike, Blackstone is actually having some kind of stake in some certain commercial properties in Indiabulls. So is there any kind of other progress which can be made via Blackstone, since they are also a part of your REIT?
Yeah, so Blackstone are a sponsor and therefore a unit holder in the REIT, along with many other unit holders. If they were to look at an asset and offer it to the REIT, any asset, whoever was offering it to us, we would prefer to own 100% of that asset, because there's some tax benefits around that. So that really would be one of our key criteria for any asset that we would look at anywhere in the country and from any party who was offering that.
Well, that was the management at Embassy REIT talking about the Q1 earnings. Back to the markets then, and we have slumped a little bit further. So about 10,991 now on the index. Lowest point of the day, we've broken below that 11,000 mark. Interesting to see Friday's close was at 11,100, completely wiped that off, despite the support coming in from Reliance Industries. Brijesh, Bhatia of Dealmoney Securities is joining us right now. Along with him, we've got Dharmesh, Kant of IndiaNivesh Securities too. Gentlemen, good afternoon to the both of you. I just quickly want to get in, Brijesh, first on the technical levels, and then talk about some fundamental aspects as well with Dharmesh. But what would you do, Brijesh? We are already off 200 points from Friday's close. What would you do now? 100, 110 odd points. Would you sell further?
I would take a contra bet going long at current levels for a couple of reasons. First, if you look at the structure, Nifty has formed the bullish shark, and we have seen rally of around 200-250 points from the lower levels. Second, if I look at the momentum from the lows to highs and the recent today's fall, it is just at 50% retracements. So I think at 50% retracements, it plays out to be a key support zone. Third, if I look at 11,000, is a key psychological levels on the charts or on the trading side. And fourth, if I look at the OI structure 11,000 is indicating a strong support. We have seen a huge put writing on the weekly expiry, and also if you look at the 29th August, which is the monthly expiry, there 11,000 put has been holding the highest OI. So I think 11,980, 10,980, 11,000 will act as a key support zone. So I would initiate a fresh long over here, keeping a short stop loss of around 10,955, and from a trading side, I am expecting back to around 11,130 levels on the upside. Even you can look at for the August series till 10,840 is not breached. I think possible test of around 10,230, 11,230, 11,270 can be on cards in August series as well.
Let's talk stocks then quickly, Brijesh. What are the stocks you're recommending this afternoon?
I'm recommending one long and one short. First, the long is on ACC. If you look at the stock, it's been slightly consolidating in the range of 1600, 1500 for quite some time, and hovering around its 200 days average. If you look at the current prices around 1150, it is being trading right at 200 days average, which is around 1549. So one can initiate a long bet at current level, keeping a target of 1640, and upside stop loss could be placed at around 1510, and 1640 is the upside target. Second is a short on Kotak Mahindra Bank. If you look at the stock for last 2-3 days, it is being resisting around 1530, 1535 marks, and we have seen continuous selling pressure coming around those levels when prices test around these range. So even if you look at the Friday session and Thursday session, even in today's session, we have seen the similar formation at around 1530 levels. So I think one can look for short opportunity around 1520, 1522, keeping a target of 1475 on the downside, and stop loss can be placed at around 1541.
Okay, so those are some stock-specific ideas coming from Brijesh. One buy call on ACC and a sell call on Kotak Mahindra Bank. But the markets are not looking great at all, below the 11,000 mark, and a sharper sell-off seen for the banking stocks today. Let's bring in our fundamental guest then. Dharmesh Kant of IndiaNivesh Securities joins us on the show now. Hi Dharmesh, good afternoon. Today's fall is led by what we've seen happening in the markets globally, and now the trade war seems to be shifting towards the currency war, which will never be a great sign for equities worldwide. How are you reading this development, and what should one do in the markets now?
Yeah, good afternoon. Yeah, definitely not, because currency war is something which led to 98 collapse of the Asian financial crisis. But look at the 10-year government bond yields; they have crashed to around 1.67. So almost 40% kind of fall has already happened just before the 20 basis point rate cut was in Fed. So things are looking very, very murkier on the global scenario. Be it dialogues between US and China, or the slowdown in the economy. And I think it's just the beginning of the correction which we have seen. This was the first leg of the correction which went by, and now we are getting into the second leg of the correction before some consolidation happens. So things remains to be bad. And domestically also, if you look at the top 200 market cap companies, they have not reported any significant numbers. So all the numbers they have reported is single digit profit growth. At the same time, the commentary has been equally very negative. So there is nothing to support. Only two factors which can support this market as of now. One is the monsoons have recovered, and second is the fall in the crude oil prices. So these are the two comforting macro factors for India which can provide a flow to the market. Other than that, if this rupee is already trading above 71 now, if it goes beyond 72 or 72.5, it will be a further pain for the economy. So I do think we are more legs to go down than to go up, purely from trading perspective.
Dharmesh, even the positives are not creating any sort of tailwind. As you rightly mentioned, Brent crude, which entered into bear territory last week, still no respite seen for the equities because of the currency war now, which has begun. One bright spot in today's market, Dharmesh, and that's Reliance Industries. Do you think the deleveraging move that the company has announced in its annual general meeting yesterday, the response to the stock is far-fetched, or do you see this move will last in the long run now?
No, this move is going to last in the long run. See, the one good part about Reliance is whatever they say, they do. So this is what they have a track record. Earlier also, whenever they have announced something or whenever they have laid out a business plan, they have executed that, and they have executed it successfully. So there's not even a single failure as far as Reliance is concerned, Reliance Industries per se. So I do think the announcement which was made, and it's a very far-fetching long-term return kind of an environment. So by 2021, if it is going to be debt-free, 30 rupees would be the EPS which will come just on account of interest cost saving on the Reliance Group. So that itself, if you give it a 15 kind of a PE multiple, it's 450 rupees on the stock price. So I do think the value unlocking of retail and the Jio thing is about to happen. That has not happened as of now, and this is a stock which needs to be lapped up by investor on every correction. My own sense and calculation says that by FY21, the earnings of Reliance, the EPS would be around 125 to 130. So 1800 is the target price we are working on. And this is one of the safe and surer bets if somebody wants to buy. I mean, for weak-hearted people, they may not be buying today because the stock is up significantly in a falling market. But if you get a chance to buy it, say around 1100, 1150 kind of a 5-7% correction from here, one should be buying this. This is a must portfolio buy going forward for next couple of years.
While obviously this definitely has a feature in long-term portfolios, from a trader standpoint, Brijesh, it's already run up 10% today. Last 2 days, Thursday and Friday of last week itself, the stock has seen almost a 5% move already, so accumulate a 15% move. Is it run up too fast, too soon? So, I mean, traders technically missing the bus?
No, not exactly. So if I just look at the Reliance, it generally has the habit of gapping up and then retesting the gap and resuming its upward journey. So as of now, I think at around 1280, it might slightly dip towards 1240, 1235 zone to retest its gap, and then new fresh journey might see. So I think dip can be on cards, and one can accumulate around those levels between 1240, 1245, and again look for a 1350, 1370 on the upside.
Any which ways, there are pretty aggressive targets on Reliance Industries post their AGM. So I think CLS has got, I think, one of the most aggressive targets of about 1530 on the stock price. It's already closer to 1284. Should actually pull up the ANR function of Reliance Industries now to just get in a sense of whether or not most of those updates have been factored in and what exactly is the potential upside now for the stock right now. So the ANR function will give you a better idea. So you still have a return potential of another 10% because you've got most of the target prices being up now to about 1412. That's the average that we've been seeing, and most of them have held on to their calls. Just a few overweights that have come in after yesterday's announcement. But individual stocks, we've been talking about 10 networks, Hathway, or double-digit gains coming into them. Gen Irrigation is up about 8% today. Jaycorp is up another 10%, and Indiabulls Housing 10% higher in today's session. So extremely volatile on the stock. Big swings on an intraday basis is what you can expect from Indiabulls Housing Finance. Dharmesh, from the from most of the companies, and particularly Indiabulls Housing Finance, what would the idea be now? Would it be to start investing at these levels, or just still there is still more ambiguity left? So you would rather just save up on that money and invest someplace else?
No, there are too many ambiguities left out there as far as Indiabulls Housing is concerned. And if one wants to invest in housing finance companies, there are better options available. So the mud which was thrown on Indiabulls Housing post that sting operation or whatever the reports were, so those reports does have some merit. It's not that it's completely out of the way. And I think it will take some time before the company comes clean on the entire financials which they have. So I mean, if you go by the numbers which they reported in Q1, was horrible sort of a numbers, and if the things were going good and great, that's kind of a disappointment should not have been there first in the first case itself. So I would suggest to avoid Indiabulls Housing as a firm. Let the stock jump 10-12%. It can happen. But if it really wants to go into a housing finance company with a lower interest rate regime and a boost on the low cost housing, I think LIC Housing Finance or Canfin Homes provides a much better opportunity at current levels and the current valuation. So they are a better bet as of now. Indiabulls Group should be avoided completely in my own. That's my sense on the group.
Okay, avoid Indiabulls Housing. The stock's up for the second straight day. Remember, but last week, one of the days, it also fell quite sharply, 13 to 14%. A short covering bounce seen on Friday, and today as well, we've seen a bounce back of about 10%. Let's address some more earnings. NCC reported a decline in both its revenue as well as the bottom line in the June quarter due to weak execution. To make things worse, cancellation of previously awarded projects in Andhra Pradesh is expected to impact earnings materially for the entire financial year, according to some brokerages. To discuss the quarter gone by and the outlook for the rest of the year, let's welcome in Mr. Murthy, Executive Vice President Finance at the company. Hi, Mr. Murthy. Good afternoon, and thanks a lot for joining us today on Bloomberg Quint. It's not been a great quarter for your company, owing to the decline in the execution which we've seen in the quarter gone by. Tell us, is this trend going to continue, or the situation is looking better in the current quarter?
Yeah, in the first quarter, our turnovers were impacted mainly because of the elections, the general election in the month of May across the country and also in some states. So in the month of April and May, the execution was disturbed to some extent, mainly because the payment cycle was also impacted from the state governments and some of the central government agencies. But we believe it is only temporary in nature. First quarter, we have reported about 7% less growth compared to first quarter of the previous year. But going forward, things will definitely improve. And a lot of order accretion is also expected in the current year. We are targeting a top line of around 11,000 crores for FY20 and an order accretion of about 14,500 crores for FY20. And based on the new government that has come to power at the center and in the various states, the physical infrastructure development across the country is likely to continue, and a huge order accretion is expected to companies like us. So the first quarter was a blip in the journey of the company in the current financial year. We are fully geared to see that the turnovers and profit margins are achieved for the current year at par with FY19.
So you're suggesting the growth in the top line in the first quarter did not happen because of the elections. Tell us, what is the ground situation then now? Has the execution picked up in the second quarter? Are you going to return back to normalcy?
Yeah, it is picking up. But again, there is a question mark in Andhra Pradesh because some contracts were cancelled by the new government there, and some contracts are under scrutiny, and they formed a committee to look into those contracts and the bidding process. And that may take some time. They got about 45 days time for completing that work. And after that, the works are likely to resume in Andhra Pradesh. And other than AP, rest of the country, we don't have any problem. All the projects are going on quite smoothly. We are doing some of the marquee projects, like we are doing the MSRDC Nagpur-Mumbai Expressway, about 2,850 crores, which is going on pretty well. And it is likely to contribute substantially to the top line in FY20. And also we are doing projects like Lucknow Airport, Patna Airport, and also medical campuses for All India Institute of Medical Sciences at various places. All these things are likely to contribute substantially to the top line in the coming quarters.
Mr. Murthy, tell us what's the total value of the orders in the state of Andhra Pradesh, where there has been some cancellation of the projects which were previously awarded to you?
Yeah, we have got the Chief Secretary notification saying that projects awarded on or before April 2019 and where the work has not commenced, they stand cancelled, not only for us, for all the contractors in the state of Andhra Pradesh. As far as NCC is concerned, in that category, we have about 6,100 crores of orders are there. But the point here is we started the year with an order book of about 41,000 crores. And out of that 6,100, some projects cancellations we have received, about 3,800 to 4,000. Balance are yet to come. Assuming all the 6,100 stand cancelled, our order book will come down to something like 35,000 crores. That is a very substantially large order book, even at the beginning of the year. And added to that, the new orders that are likely to come to us in FY20, something like 14,000 crores. So we have got enough order book on table to take care of the targeted turnover in FY20.
Okay, fair enough. So you're suggesting that total exposure to Andhra Pradesh order book was nearly 6,100, out of which 3,800 has been already declared cancelled and the rest is under consideration. Give us a sense then. I think you won almost 636 crore worth of orders in Q1. What's the current status in the second quarter? Have you won any orders so far?
Yeah, you see, first quarter order acquisition also was a bit sluggish, mainly because of the elections, mainly because all the government agencies were busy with the elections and the tendering process did not take place. Particularly in the month of April and May, there was no order acquisition as far as NCC is concerned. But in the second quarter, order acquisition is likely to pick up. In the month of July, we have already reported about 500 crores of orders have been received. Some more orders are expected in the month of August, where we have become L1, but the letter of intent from the client is yet to be received. So order front, we are doing well, and that will continue. Particularly the governments are giving a lot of importance to development of physical infrastructure across the country. And we are a frontline company, and we are nicely positioned to capture those orders.
Murthy, one last question before we let you go. You spoke about your outlook on your order book positions. Could you break that down for us, particularly with regards to the expressway projects and what stages of tendering are they in? Your civil construction opportunities, how big are they? With regards to affordable housing under the PMAY, how big is that? And also the fact that the government is now starting to push towards water transport, distribution and storage, which is one of your core capabilities. How much of a kicker is that expected to be for you?
Yeah, see, all these three verticals that you have mentioned, buildings, roads and water pipelines, together constitute for us in NCC about 75 to 80% of the order book. And we have got a leadership position in all these verticals. And because of that, we are able to get substantial orders across the country in various states. Now we are an all-India company and we operate in about 27, 28 states. And we have got a decentralized structure of bidding for projects, and that gives us the speed that is required to take care of the emerging opportunities in various parts of the country. So all these measures are definitely going to give us substantial order acquisition in the current year.
All right. How much would you expect from expressways, just because that's one of the largest chunk?
See, we are doing right now the MSRDC road project, about 2,850 crores are given to us. And also we are doing some capital city road projects in Amaravati, where work has been halted for the time being. But we are looking at other expressways that are likely to come up in UP and elsewhere. And we will be definitely participating where we have got a leadership position as far as the expressways are concerned.
Got that. Mr. Murthy, thanks very much. Really appreciate you taking out the time this afternoon. Mr. Vaidi Murthy there of NCC. Obviously, not what they have lost out in AP, but their ability to take on more orders so that the order execution improves through the next part of the year, which will give their earnings a bigger fillip. That is something that the street is more interested in know. NCC, though, the stock on the back of its results now has been down about 6.5% at about 64. Most of these construction majors, how do you view them, Dharmesh?
See, I think this is not the right time to go into them, because all these companies are good, but when they only worry about the construction majors as of now, that includes even L&T, they won't be getting to execute orders in a speedier way this year, because the disbursals will be delayed and then the approvals will come delayed because of the fiscal challenge which the government is facing. This slowdown which we are seeing right now will have a compounding impact on the revenue of the government, because the taxes won't come that great, and that will have a slowdown on the infra spending of the government, and that is where the challenge will lie. So my own sense is this quarter, I mean the Q2, you will get fair amount of opportunity to buy them at much lower levels, be it L&T or NCC. These are the top two picks from the construction major basket, and NCC have done all the hard work. They have turned around the balance sheet, they have brought down the debt level, they have improved their operational efficiency, they have plugged the loopholes. So all those things have been done. But I think timing as of now does suggest that 5 to 7% kind of a correction can be there on each of the stock prices, and once they are there, that is the right time to start cherry picking out there. So L&T and NCC both are good buys, but wait for some time before entering them. Let's have the fiscal maths of government more clear by end of Q2 maybe.
Okay, that's the view coming in on construction players. Just for now, focus on the markets. We are at day's low, 10,950, which we were talking about as per the options data. That level has been breached now. 10,944 is where the index currently trades. It's a cut of about 165 points. Just for the benefit of our viewers, the recent low is about 10,782, which was seen last week. So probably that's the next support level that you can watch out on the Nifty. Both Nifty, Bank Nifty once again have been trading below their 200-day moving average. Bank Nifty is down about 2.5%. I also want to pull up India Volatility Index that spiked nearly 10 to 11% in trade, I believe. Yep, it's above the mark of 17 right now, 17.5. Most of your sectoral indices are trading in the negative territory. Of course, the banks are the ones which are leading the laggards. So Nifty, Bank, PSU banking, private banking have seen cuts of between 2.5%. FMCG is down 2%. IT, TCS, Infosys may not be lending support to the markets today. Metals continues to reel under pressure. That too has seen cuts of about 1%. So it's selling across the board that we are seeing today. Brijesh, a view on Bharti Airtel as well, which is reacted negatively today right from the word go in the morning. How are you reading the charts of that stock?
Before starting on Bharti, I think I have given a long call on Nifty, which has been stopped out at around 955. So in case the viewer have taken long, I would suggest to exit on the short-term basis. Coming on to the Bharti Airtel, I think if you look at the last 6 month performance, stock was majorly trading between 340, 295 for quite some time, and we have seen stock breaking out those range. I think 340 will now act a major support because it was nearly 3 months of trading where 340 was acting as a resistance zone. So now the resistance might turn out to be a very, very strong support. So in case stocks take a halt at around 340, 345 and shows a sign of reversal, I think it would be a good bet to go long on Bharti around those levels. But at current level, I think wait for another couple of % more how the stocks rate in the 345 zone, then take a trade around those levels.
I want to just look at M&M. While we've been talking about how most of the auto companies are trading at about 2.5 year lows, Mahindra & Mahindra is probably at these levels. The last time we saw it at around 515 odd was in April of 2014. So it's more than a 5-year low for Mahindra & Mahindra, and that's quite telling for the stock, which used to historically in the last year or so take multiple supports at a level of about 550. This time around, that has been breached in a big way, and there is no floor to this downside on the stock, at least for now. And today's session also proves that about 514 volumes have picked up, about 3 million shares have been traded, and it's it's just the stock at one point, the way it was trading with the rest of the pack clearly shows the kind of negative sentiment that's enveloped Mahindra & Mahindra and the prospects of the stock doing well in the future with regards to its overall earnings picking up. But a quick view, Brijesh, Bhatia on Mahindra & Mahindra, 550, multiple support levels in the recent past, broken below that, almost a 5-year low for the counter.
Yeah, definitely auto space is in the downtrend and M&M is no left in the downtrend. I think 446 is the level I'm eyeing on the stock. So if I just look at the stock tendency to move, it falls around 140, 150 points, then consolidate in a range of around 3-6 months. If we look at the similar 700 and 600, since Feb it was being trading in those range, and now we have seen 600 being breached. So I think next target is around 446. So if I just look at the 161% of that fall comes to around 445, 446 levels. So that is the level I'm target, and every rise from around 534 could be a short opportunity on it.
Okay, Mahindra & Mahindra trading at 5-year low, not good times for the entire auto space. We've seen sell-off coming up for the entire space, be it Auto Ank or the OEMs. Let's move on. HDFC Mutual Fund increased stake in oil marketing companies while decreasing stake in banks and NBFCs. Yash Upadhyay gives us a wrap of all that HDFC Mutual Fund bought and sold in the last month. Yash.
let's directly go straight to which are the stocks wherein HDFC AMC has increased their holding, and there isn't a clear trend, but what we pick up from the numbers is that many of the Nifty companies there, they have managed to increase their stake in the previous month, and that plate should come up as well on your screen. ITC is right at the top, wherein they have bought an additional 3 crore shares in the previous month, along with a bit of the OMCs somewhere lower in the pack. HPCL as well as BPCL, they managed to buy more than 50 lakh shares in the previous month, along with Power Grid, BEL as well as Coal India featuring in this list. So a bit of the OMC and PSU stocks had found buying interest from HDFC AMC in the month of July. But on the other hand, there is a mixed trend again that we are picking up, but a lot of the Nifty names, they feature in the list of stocks wherein they have reduced their holding, including the likes of GAIL, UPL, SBI as well as ICICI Bank. A completely divergent trend to what we saw with SBI Mutual Fund, wherein they had increased their holding in the financial names. We've seen some of the selling coming in. Shriram Transport is another name from the financial pack, wherein they have sold some amount of shares in the previous month. On the other hand, there were no new buys in the month of July, but a handful of sell-offs. We'll start first with the like of Bharat Financial, when they have sold close to around 5 lakh shares in the month of July. And on the other hand, we've seen selling come into IDBI Bank as well as Colgate, only about 11,000 shares there, and an additional 3 lakh shares in IDBI Bank. So these are the 3 names which go out completely from their portfolio.
All right, on to a Bloomberg News exclusive. Amazon may be close to buying a 10% stake in Future Retail. The world's largest online retailer has been in talks with the Kishore Biani promoter company for some time now. Ari Alster also joins us now with this exclusive. Ari, thanks very much for taking out the time. I think the last time we spoke about this was sometime in November, when the talks were slightly more ripe. There were talks of about almost 2,000 odd crores coming in by this deal for the Future Retail Group. Tell us what you've got.
Right. Well, basically those talks that we last heard about in November, they've sort of been dragging on and off as the two parties have tried to figure out how they could make a potential deal work under the government's new e-commerce policy. And it seems that they're finally getting close. The exact number, all the numbers aren't exactly clear yet in terms of how much money and the size of the stake, but we are hearing that it could be as much as 10% of Future Retail for about, as you said, 2,000 crore. Although these details are still subject to change, but what is clear is that the companies are in discussions with intent to do a deal.
All right.
Sorry, I've lost the earpiece.
No, we got your point, Ari. Thanks very much for that. So that is the Bloomberg News exclusive there. Very close to acquiring that 10% stake in Future Retail. The last time, like I said, in November when this came about, there were talks of closer to about 2,000 odd crores. That's the size of the deal that was going to be executed under the foreign portfolio investor route. But this is probably going to be, if this actually culminates, this is going to be the third investment that Amazon is going to be making. They already hold a part in Shoppers Stop. In September last year, they had Witzig Advisory Services. They had co-invested in the company, and now there are talks with Future Retail. So watch out for that one. The stock's in focus right now. Other than that, for the markets now down 1.6%. The Nifty 50 collapsing pretty quickly. 183 is where it's currently trading. Lower by 183 points is where it's currently trading at. Dharmesh, Kant, thanks very much for joining us this afternoon. Really appreciate you taking out the time and sharing your thoughts with us right here on the show. But while we were talking about the swift pace of declines on the index, I'm sure there are a few stocks which still make those headlines in terms of gains. And which are those Fab 4 stocks? Mishika Parak, she's joining in right now with the details of that. Mishika, good afternoon.
Good afternoon, Devina. First on my list of Fab 4 today is Godfrey Phillips. The stock is gained on the back of very good quarterly numbers. Their revenues are up 40%, both net profit and EBITDA is up 2 times, mainly on account of high revenues, 42% higher revenues in cigarettes. Second on my list is Reliance Nippon. The stock touches a fresh 52-week high and has gained the most in 2 months. Stock number 3 is Century Ply. CLSA upgrades its recommendation of the stock to buy from sell and hikes target price to 168 rupees from 159 rupees, which implies a 25% gain. Last on my list is Narayan Hrudalaya. The stock has gained for the 5th consecutive trading session with volumes trading at 30 times its 20-day average. Back to you, Devina.
All right, Mishika, thanks very much for that. So those are the Fab 4 stocks of the day. You still have a few bright spots even in a falling market. But bringing in Rahul Mohindar of Viratech Software, he's joining us right now. Rahul, what would you do? We're down almost 200 points on the index.
Good afternoon. Well, I continue to be negative, as I have been over the last 3 or 4 weeks. 10,600 is the target we projected, over last month, and we still maintain that. Our targets on the index are 10,600. Near-term support does exist at 10,920. You might see some kind of a bounce back, but mind you, that's an intraday support that we believe could come in. But all in all, the market has very stiff resistance at 11,150 in and around that 200-day moving average level as well. So I don't expect the market to be, maintaining levels. I still think we'll drop further. I mean, if you remove Reliance from the equation today, just imagine what we're at. So I think we're really looking at severely lower levels. I am still negative on the bank Nifty as well. Some kind of support at 27,650 there. We've got resistance on the higher side at 28,400. But in the main, I think, we're headed for some more of a decline on both the indices.
Okay, that's the view on the index. Let's just pull up Sun Pharma as well. I guess the numbers are flashing there on your screen. Net profit is at 1390 versus our estimate of about 994. Remember, Taro numbers were already out, and this is the consolidated number that you're seeing. Our Bloomberg estimate was somewhere about 1090. On the revenues front, on the consolidated side, we were expecting a figure of about 8120, and the revenues, the total revenues, by the way, from operations is 8374. So that's slightly above what the street was expecting on the top line front. The stock's also reacting on the upside right now, which is sitting with gains of about 2 to 2.5%. Just looking at a couple of other figures, the other income for this current quarter is at 213 versus 199, which is no major change, just about 13 to 14 crore. Finance cost has come down to 104 versus 131 crore, which was there in the corresponding quarter. Also important to note, finance cost, even on sequential basis, is down quite substantially at 104 versus 150 crore, which was seen in the previous quarter. And of course, there is some FX movement which has been seen. There's a forex gain of about 67 crore versus a loss which was seen in the previous quarter. So probably that too have contributed to the bottom line that we're seeing this time around on Sun Pharma. The net profit figure has come in at about 1387 crore. All right, let's also bring in Avinash, who joins us right here in the studio. Avinash Gorakshakar. And Avinash, any thoughts on Sun Pharma?
No, I think numbers were definitely expected to be a shade better, but I think operating, margin numbers seem to be much better than what the street anticipated. Our sense is the top line as well as the operating EBITDA has been much better than the street estimates, and I think even the bottom line number should definitely be a welcome sign. I think clearly what kind of sustainability these numbers have in the coming quarters and what kind of growth commentary the management gives on the con call will now be awaited. But I think overall a decent set of numbers.
I think the EBITDA has also come in higher, so it's been an operationally strong quarter for Sun Pharma. I think closer to about 1996 is the EBITDA number versus an expectation of 1720. And you can see the way the stock has run up. It's up about 4.25% right now from being almost just closer to 1% higher. So it's a big move up on the counter. Margins also could be anticipated to see a bigger improvement. Kunal Dharmesh, he's joining us right now from Sbi Cap Securities. Kunal, a quick review of the numbers first up.
So numbers have come in much better than consensus expectation. So they are largely in line with what I expected. In terms of revenue, it was just 2% above my estimate, and EBITDA was largely in line. It has beat the street's number by a significant margin. So I believe that would be primarily due to the new business opportunity they talked about in Q4. So I think there is some addition to the run rate that they did in US in Q4. Sequentially, I believe U.S. business would be up, although we await more details in press release. But I think U.S. business would be a bigger driver. And secondly, the domestic business would have come in line with what we expected. So last quarter, they had impact of Aditya Medicare transfer of the distribution, which would have normalized in this quarter, and hence the profitability numbers are looking much better.
And on an operational basis, there was never a question. I think 8 to 10% was the India business growth number that was expected, but 15 to 20 odd percent. And the improvement of the EBITDA margin was expected to be on the back of the US business revenue growth that Kunal just spoke about. What happens to the stock now? Do you see it re-rate?
So I think it would be important to know the commentary on specialty. But definitely these numbers provide some relief in terms of what they are investing in specialty business in US. So people expected much more investment in US specialty business, especially when they have started the advertisement for their molecule Ilumya. So that would have expected to put pressure on margins, but I think the margins have come much better than what was feared. And hence, I think this relieves some pressure in terms of what could be the sustainable profitability from here on could look like. And as and when specialty ramps up, the margins would improve further. So I think this would re-rate, this would start to re-rate, especially on this commentary on specialty business.
Okay, we'll wait back for more details, Kunal, with regard to how the US business and what sort of growth we are seeing on the domestic side. But tell us, what's your rating on the stock and what sort of target price do you have?
So my rating, so I have buy rating on Sun Pharma and my target price is 525. So in my view, stock is trading at a very cheap P/by multiple of around 16-17 times of my FY21 APS. And hence I have a buy rating because I believe the specialty molecule in US would be a significant growth driver over the next 3 years. And that would also improve margin significantly.
Okay, Kunal, we'll leave it at that note. Appreciate you joining us and taking us through your take on Sun Pharma's numbers, which are looking better than what the street was expecting. On the operational side, the numbers are looking good. It's a beat when it comes to the top line and the bottom line. Revenues have grown nearly 16%. Look at the stock. It's reacted pretty positively after the numbers came in. It's sitting at about, with gains of about 5%. Let me just take a very quick technical view on the stock. Rahul, on the charts, 5% move on Sun Pharma. Would you take a bet?
Honestly, it's too early to kind of put in the bet right now. I would still think at these levels, you may witness some near-term resistance. But again, if you're looking at this for a 6 month to a 1 year horizon, I'm quite open to the idea. But if you're trying to look at this very near term, the stock will probably come under some pressure now. So given a time horizon in mind of 6 months plus, why not?
Okay, that's the technical view on Sun Pharma. The margins are at 23 versus 23.5, and the expectation, by the way, was 21.2. So it's a big beat when it comes to the operational performance for the June quarter for Sun Pharma. Let's quickly address the markets once again. 10,936. Avinash, it's not been a great start to the week, and we've been discussing how Reliance is trying to lend support to the market. But you've got HDFC twins, you've got Bajaj twins, which are correcting, and correcting not by 1 or 2%. They've corrected sharply. Would you do in a market like this where the investor sentiment is totally dented? And I think today's move is also got to do with what's happening globally with the currencies.
Yeah, I think today the market sentiments were obviously hurt by what happened in Argentina and Hong Kong. But I think clearly, if you talk about the HDFC twins or the Bajaj twins, I think taking a longer term view, Navneet, these are definitely stronger bets. I think HDFC Life, or for that reason, something like a Bajaj Finance. I think these are sustainable businesses, despite the fact that we may be seeing a kind of a selling wave in the near term. At least the Q1 numbers and the commentary given by the managements of these companies appears to be pretty solid. Balance sheets have been well capitalized, and I don't think you're going to see any negative surprises in terms of numbers. So I think one cannot obviously change the sentiment, but obviously in terms of the numbers and in terms of the cash flows and the business scalability, I think if one were to have a 18 to 24 month view, I think these are times when investors need to build portfolios for the next 18 to 24 months. I think in the near term, it's very difficult difficult to guess what kind of trend the markets would be taking. And obviously in the near term, I think despite good numbers, markets are falling and even blue chips are getting a beating.
Just look at Bajaj Finance. I mean, that stock in and around the time that it reported numbers was trading somewhere closer to 3,000, went all the way up until about 3,450 odd, and now back down to about 3,200 odd. Tells you the kind of weakness that the market is in. But let's also take a look at what dealing rooms are recommending this afternoon. Yatin Mota, he's here with his channel checks. Yatin, good afternoon.
Good afternoon, Devina. ICICI Prudential is the first stock which dealers do indicate the weakness would continue. They reported, a flattish kind of a trend as far as the AP, insurance premiums were concerned for the month of July. Probably post that data point was released, the stock, went under pressure. 5% down for that one. Dealers do expect further weakness here. Yes Bank, again, a very big surprise post the successful QIP. The stock has corrected over 10% from the QIP base price, which is a cause of concern for investors. However, dealing rooms do indicate that FIIs are aggressive sellers as far as Yes Bank is concerned. Stock hit a fresh 52-week low today. So at a multi-year low, Yes Bank dealers do expect further weakness to continue here. And pharmaceutical stocks are looking good. Sun Pharma is up 5% post the earnings. Aurobindo Pharma is also in the green despite the market pressures. Selectively, dealers do indicate that pharma stocks is where we could find some strength, and there could be some further upside in the sector. So as a defensive play, probably pharma is something wherein dealers are putting their money on.
All right. Thanks a lot for that, Yatin. So pharma as a pocket, remember it's a defensive pack. IT and pharma, both these particular sectors, that's where the money seems to be finding refuge. And interestingly, Yatin spoke about how FIIs have been slowly but steadily getting out of Yes Bank. And there's been quite a considerable drop actually. From last June to this June, there has been almost more than a 10% drop in the kind of FII holding that we've seen. And even for mutual funds, in the top 10 stocks, if you go to see how mutual funds have varied in terms of their weightages, you've seen all of them reducing their weightages on all the heavyweights, including the likes of HDFC Bank, HDFC Limited, ICICI Bank. Their holding has come off quite a bit this time around from the last year. But individually, right now, Rahul, Mohindar, anything that strikes the eye from a trading point of view, maybe a week down the line?
I think OMCs are looking weak. I mean, much against the kind of news flow. I still think an HPCL or a BPCL can be shorted into 225 is our target on HPCL, 250 being a stop loss. A stock I like in the decline is Titan, and that's clearly because it's clawed back above the 200-day average. So 1,110, that could be a target you trade Titan for with a 1,035 stop. So it's a lot of individual play, but ballpark, if you look at the index heavyweights, they still look under severe pressure. I mean, Reliance, of course, has to be excluded in that statement, but on the whole, it's very hard for me to, buy the top 10 index weights at this point.
Okay, Reliance in a weak market, commendable. It's managed to sustain the gains, but the other stock which is seeing correction is Bharti Airtel. So we've taken views from every guest on Reliance Industries. I want to come to you on Bharti Airtel. Reliance stated that they expect their EBITDA to grow by about 15%. They never gave any guidance on the revenue front. Which means they do expect superior returns now. They've also said they expect the telecom business contribution on the EBITDA side to increase to 50%. Do you then feel then this also calls for tariff rationalization, which could be a mildly positive news for Bharti Airtel?
Yeah, it could be, but I think the bigger concern for Bharti is probably on the broadband business, Navneet. I think clearly once the broadband business starts getting ramped up, I think you could definitely see Bharti getting hit, because a considerable amount of revenue actually for Bharti actually comes from the broadband piece. And I think looking at the kind of pricing Reliance has announced yesterday, I would believe that they would be looking at increasing market share and compromising realizations initially. I think clearly clearly, their welcome plan is not completely understood, but from what the things appear to be, I think most of the other DTH players as well as Bharti could possibly find their market shares getting eaten up, and I think this could be the second route of disruption, and that is probably, I would believe it's better to wait and watch for Bharti, although despite the fact that, the mobile ARPUs definitely could show signs of some sort of stability, but on the broadband business, I think we could see a lot of disruption happening now, and clearly I think this seems to be now the new growth mantra for Reliance. So clearly I think post September, I think one would like to see what kind of impact it makes on players like Bharti and Vodafone.
Okay, that's the view coming in on Bharti Airtel. Let's quickly get you some closing strategies from our technical expert. Brijesh, let me come to you. Any BTST or any STBT for tomorrow's session?
I would go short on STBT on Tata Steel. So stock has breached its 350 support zone, and one can look for STBT around 340 to 343 as a target, keeping a stop loss of 354 on the upside.
Okay, Rahul, what about you? Your strategy?
I'd be looking at selling Larsen and Toubro. We're looking at 1280 being a target. Keep a stop loss at 1315.
BEML and BHEL, two of these stocks, heavy thrashing in today's session, 13.5% under for BEML, and BHEL is down about 11% right now. Anything on these two names, Rahul?
So BHEL, of course, continues to be in severe bear grip. I mean, this is one of those stocks where I'm not really expecting a sudden turnaround. Now, if you look at even for that matter, BEML, we don't have any breakouts on these counters, and every rally that's coming in is more corrective in nature. We're not able to and above all, if you look at today's breakdown on BEML, why it's a bit more significant to me, this is probably the lowest point of 2019. We've broken the key support levels of 780 and about 724 respectively, that too on a closing basis. So technically this has to go down as a negative. And in terms of price targets, we even have a target on this at 640.
Bank Nifty is now down 730 points. The Nifty 50 precariously close to breaking below 10,900 also in intraday trade. So 200 points given off from Friday's closing already, and just at the brink of 10,900. That's not going to go down too well. We've any which ways managed to marginally see a slight bit of that relief rally coming in the last two trading sessions of last week, not being able to hold up, not sustained at all. But the Bank Nifty, Rahul, Mohindar, if there's a fresh trade you could initiate now, what would it be?
If I had to do a fresh trade, it's definitely going to be on the sell side. I am not bullish on an SBI, and I've been very vocal about this over the last few interviews over the last 3 weeks. We do expect 27,000 on the Bank Nifty. We do expect 10,600 on the Nifty. So the question is more about risk is to reward. It's always wiser to be selling as the market moves up. But if you are going to do it right now, you've got to do it with a stop loss at around the 28,000 mark. So take a risk of about 300 plus points. You still have a good 700 to be made. So that's the way I justify it.
Okay, Nifty down 200 points in trade. Avinash, would you buy anything at current levels?
No, I think we have been telling our clients to actually buy into ACC, ICICI Bank. In fact, Navneet, clearly it's very difficult to visualize what could be the bottom. But I think if one were to look at the fact that, these are corporates which could possibly withstand selling pressure beyond a particular level. We have been telling our clients to actually avoid mid-caps because that is where the most of the damage has happened. I would still be a buyer in these stocks provided, the view is longer term. And I think ICICI Bank, or for that reason, ACC have held on pretty well. So I think hopefully, these are stocks which could possibly offer some defense, at least in the near term, but longer term, value can be made.
Okay. The other heavyweight which is dragging the index lower probably is ITC. Avinash, Godfrey Phillips, VST, the numbers were good and spectacular set of numbers from Godfrey. EBIT growth was nearly double from the cigarette business. ITC, I think the volume growth on the cigarette side was mildly below what the street was expecting, about 3% or something. 3%. Stocks at 52-week low.
No, I think, in terms of the overall performance, I think if you look at Godfrey Phillips numbers, definitely a very, very positive beat, both on the top line as well as on the EBITDA and bottom line. This has come after a very long time. So I would believe that, what kind of sustainability these numbers Navneet carry is very important. But definitely in relative terms, we have seen that the cigarette business for ITC has underperformed, and, volume growth of 2 to 3% has not really excited the markets. And I think unless we see volume growth of at least 6-7% coming in, I would not be surprised that ITC could possibly be an underperformer for some more time.
Okay, that's ITC, which is, by the way, at 52-week low today. And I just want to pull up the other heavyweights, HDFC Bank. All of them are seeing a very, very sharp correction in today's session. And you've also got Indiabulls Housing. I think only 4 stocks right now are managing to hold up in the green. So let's quickly go across to Neeraj to find out how the closing is panning out. And Neeraj, it's not looking good at all.
Not looking good at all. 189 points off for the Nifty. We're almost back to, well, not necessarily square one from the levels around where we started off this up move, thinking that the government is now trying to take some coordinated action. And the Bank Nifty in particular, 700 points lower. Had it not been for Reliance today, I'm sure we discussed about it so much during the show as well. Had it not been for Reliance, we would have been lower, almost lower than the levels from where this up move started. So looking painful for the large caps, looking painful for the mid caps as well, I'm sure, because it's largely, as we said, all through the day today, Reliance Industries, which has helped bring up the mid-cap and the small-cap indices for you. And you can see that 2.23% lower for the mid-cap space. The BSE 500 index as well, down nearly 2%. What's happened in the large-cap space? Well, on the gaining side, it's only Reliance. You can argue Indiabulls Housing Finance is also there, and that stock is at the top draw, about 14.5% higher. But frankly, from a weightage perspective, Reliance Industries. Sun Pharma had some more teeth after the results came out, 4.5%, and some bit of strength in GAIL, but aside of that, not quite. Look at the losers though. Yes Bank closes in at the lowest, almost at the lowest point of the day, or at the lowest point of the day. Bajaj Finance, M&M, NTPC, the list is peppered with losses to financial names and auto names predominantly. NTPC corrects after the results, but aside of that, Bajaj Finance, M&M, Bajaj Finserv, iShares, HDFC, you have some bit of losses to stocks like Grasim as well as Maruti. So pain points, serious pain points. We have 15 stocks on the losing list, and the lowest loser is ITC, which is down 3.5% as well. So very difficult to figure out which were the top contributors on the downside. My guess is that stocks like HDFC would top the draw there. So the HDFC twins almost negating the kind of gains that Reliance would have gotten, Navneet, but there's pain at the broader end of the spectrum in a meaningful way as well.
That's right, Neeraj. The selling today was across the board. Even the broader market succumbed to selling pressure, as we've seen the S&P BSE 500 index falling nearly 1.8% in trade. But let me just highlight a couple of gainers. First, Hexaware, which came out with its numbers last week, did have a positive reaction, but there was a bit of selling which came from the top on Friday. Today, the stock actually opened in the green, and it managed to sustain the gains even in a weak market. So 3.5% higher for this one. Godfrey Phillips, like we were discussing, good set of numbers which came on Saturday. A fantabulous growth seen on the cigarette EBIT side after a really, really long time. And the street rewarding, by the way, the stock locked in upper circuit with gains of 20%. Hathway was the other one which did well in today's session. Hathway also staring at, upper circuit gains of 20%. And Ester Industries came out with its numbers after the numbers. Okay, this one is also closing with upper circuit of 20%. Good set of numbers from this company. And on the losing side, majority of them actually were reacting to bad set of numbers. So let me start off with BHEL. They reported a loss of about 210 crore. It was even an EBITDA loss which they reported, so not great set of numbers. 12%, nearly 12% lower for BHEL. In fact, it was the top F&O loser as well. For Divi's Laboratories as well, the numbers came out over the weekend. There was some margin decline seen, and the street probably didn't like that. 9% lower for Divi's Laboratories. Steel Authority also margin compressed on year-on-year basis. The steel companies have not been doing well because of lower LME prices. Muthoot Finance came up with the numbers, but this one got battered because of maybe the flood situation. So this is down about 8%. NCCV we spoke to the management. Not a great quarter at all. Weak execution. No growth on the top line seen this time around. Just Al was the other stock. And remember, this is a momentum stock. When you got markets falling by 1%, 1.5%, this one also tends to fall. 7% lower here. Where you got M&M trading at 5-year low. You also had M&M Financial, which came under pressure. 6.5% lower for this one. And Bharat Forge from the auto space did see selling pressure. In fact, the entire auto pack has been under pressure. Bharat Forge today closing with cuts of about 6.5%.
All right, so not broken below 10,900, probably the only silver lining that you've seen in today's session. On the Nifty 50, that'll come up on your screens. Bank Nifty, though, a very sorry state of affairs for today. 700 points given up. HDFC Twins being the key culprit. Bajaj Finance, Bajaj Finserv also adding to the pain. And that's what you've got in terms of the weightage moves and the point contribution. So these top 4 stocks probably eroding all of those 95 points and more. From Reliance, India Bull, Sun Pharma, marginal gains there, but 293 points, remove 95 points from Reliance Industries, you would have had probably a level of closer to 10,800 today.
Well, and the picture for broader markets was not great at all. Let's just have a look at the market breadth. And you did see the gap widening in the second half of the session, and it was almost 1:2 in favor of the declines. With markets falling, you had India Volatility Index surging quite sharply in trade, and I guess that also touched the mark of 18, closing with gains of about 13 to 13.5%.
I think, and the turnover is also an important factor to keep an eye out on. 36, almost 37,000 crores in terms of the NSE cash market turnover. On the futures and options side, this is also at a slightly higher level than the last few days.
The weekly
average.
options expiry will be tomorrow because Thursday is a holiday. So maybe
that's closer to about 17, 18.
Yeah,
that's what you witness generally. And but the cash market, that's the number that you need to watch out for. I don't know whether that marginal 200 crores that came in on Friday, how much more has reversed in today's session. But quick closing comments from both our technical experts and Avinash Gorakshakar also, who's here with us. But I'll come to you first, Rahul, Mohindar. Something that you'll be watching out for come tomorrow.
I think you summed it up very well that the undertone is extremely bearish, and Reliance out of the equation, as we've constantly discussed. We are in deep trouble, and my whole view is over next week. What I'm really going to be looking for is 10,600 in terms of target, and then thereon will be hold on from there. Just a note on Reliance: if you look back into June and July, we really never clawed above the 1,300 mark on a close, and even today we were shy of getting through that 1,300 mark. So despite the rally up, we're seeing the resistance at that sweet spot of 1,300, 1,305. That's been a past strong resistor in the last 2 or 3 months. It continues to be even today. So I think one has to hang in over here before one even draws conclusions on something like a Reliance. So we really need to watch this market, particularly from the perspective of the top 5 heavyweights, which could take a turn even from here.
Brijesh, your closing comments?
I think if we look at the Infi, which was quite strongly holding at near all-time high, has given up its momentum. So I think Infi now turns out to be a risk-reward wise a good short bet, keeping a stop loss of 785. And I think back to around 700 levels can be seen in coming weeks. So I think IT would be another back one can look for a short opportunity now, looking at today's momentum where market breadth was very strong from the large cap side on the downside.
All right, on that note, Brijesh, as well as Rahul, we thank you for joining us today and taking us through your technical views. Closing thoughts from you as well, Avinash. I'm sure the portfolios of a lot of retail investors would be bleeding. What would you advise them to do?
No, I think in this market, as I mentioned, I think it's better to hang on for some time within the large caps, and I think hopefully I think the coming week if the government does announce some soft measures, like they have had several rounds of meetings with the industry. I think hopefully if something on the FPI issue and some industry related issues do come in, then I think you could possibly see a change in sentiment. But until then, I think the markets are definitely under a bear hug, and it would possibly be a little difficult to expect a strong bounce from here.
Yeah, this has turned out to be a double whammy where we were tackling domestic issues, waiting for some bit of announcement from the FM, but now we've got the global factors also affecting us. Thanks a lot, Avinash, for joining us and taking us through your views.
This is one hug we don't like.
Yeah, thank God it's a truncated weekend at least. Yeah. We'll have one more day off on the 15th. But on that note, we'll wrap it up here. It's goodbye from Davina, my side, Neeraj and the entire team who put this show together. Stay tuned to Bloomberg. Queen Market Wrap comes up next.